We're moving now to the U.S., where stock index futures pointed to a lower open on Friday as investors took note of the weaker trading seen overseas while awaiting more data releases. When it comes to data, wholesale trade is set to come out at 10 a.m. Eastern Time, followed by consumer credit at 3 p.m. Eastern Time. Meanwhile, in earnings, Kroger is set to report before the bell. And the U.S. investors will be watching closely for any updates out of the White House in light of the recent political news that has rocked markets as of late, including escalating tensions with North Korea and talk of a short-term extension of the debt ceiling and government funding plan in light of the chaos Hurricane Harvey inflicted on the country. And for more on the U.S. markets, I'm being joined by my colleague in New York, Jill Maladrino. Good morning, Jill. How are you today?
Good morning. How are you?
Very well, thank you. Now, U.S. stocks hold up very well despite a number of events taking place in the macro landscape. What is driving the market?
Well, it's quite impressive how equities continue to hold up, even with a strong rally in treasuries, as the Fed rate hike odds crumble and growing concerns about another North Korea ballistic missile test this weekend and the potential for several tens of billions of dollars in hurricane damages as Irma comes bearing down on the Caribbean, with Florida in its path this weekend. Strength in healthcare and utilities and tech helped offset the big losses in the banks and insurers. The combination of soft weekly jobless claims on Thursday, the worsening trajectory of Hurricane Irma. Markets are dealing with the new December fiscal deadlines after Wednesday's extension and Fed uncertainty. And not to mention what's happening in North Korea. These have not gone away. Bonds have strengthened and the dollar has dropped. Those stocks continue to remain in a holding pattern near record highs.
Yeah, just as you said, you guys have been dealing with hurricanes, first Harvey, now Irma. Now, does Hurricane Irma have the potential to impact the markets?
Well, Hurricane Irma approaches landfall in Florida this weekend. It's expected to fall around sometime between tonight and tomorrow morning. Last night, Irma was in Turks and Caicos. Friday, the southern Bahamas. Saturday, it hit central Bahamas. And Sunday, Monday, in Florida, northern Florida, Georgia, and South Carolina by Tuesday. The storm may have the potential to slow the U.S. economy enough to prevent the Federal Reserve from raising rates again this year, with estimates rising if the trajectory remains the same.
Now, Jill, if I may ask, has anyone been able to quantify the devastation from Hurricane Harvey?
Well, as in past storms, Harvey will hurt near-term economic growth. Loss of life, damaged infrastructure, and disrupted businesses will take a huge toll on the devastated areas. Given the importance of the energy and chemical sectors along both the Texas and Louisiana Gulf coasts, the impact on the overall U.S. economy will be noticeable. However, as is the case in past storms, the reconstruction efforts, which have already kicked into gear, will boost GDP growth.
Again, we saw the U.S. index, dollar index tumble today to lowest since January 2015 on ECB tapering signal. Is this also likely going to have any impact on the equities market on the last trading day of the week?
I don't think that's really going to have much of an impact. It's widely expected that the U.S. dollar would be trading lower. A Fed rate hike in December is essentially off the table, and we have a number of other domestic issues that we're going to have to deal with from a cost perspective with these natural disasters that have been plowing through over the past couple of weeks. So I don't think that's really going to have any sort of an impact. If anything, if you look longer term for earnings, for your large conglomerate companies that do a lot of business overseas, that's actually going to help their balance sheet because a lower dollar helps them. I think at this point, the markets really aren't focused what's happening with currency, but it is really interesting to note that with having bonds up and gold up, the fact that equities is up, they usually trade the inverse of each other. I think that's more interesting than anything else.
And what is the market outlook for next week?
Next week's going to be interesting because there's virtually no earnings on the calendar. Traders are really going to be focused on Tuesday when Apple has its product event. Now, there was speculation out of the Wall Street Journal yesterday that Apple is having production issues, and we saw a little bit of a sell-off midday yesterday. So it's going to be interesting to see if they address that on Tuesday. So from an equity perspective, that's really going to be what traders will be looking at. There's really not much in terms of economic data. We have CPI and PPI coming out, so it's really more in the manufacturing sector. But I think going into next week, we're going to continue to focus on what happens with geopolitics and really how the U.S. is going to clean up domestically following these two hurricanes.
Well, thank you very much, Jill. We'll surely keep an eye on that company news coming out from Apple next week. Enjoy the rest of the day. And in Asia, equities closed mostly lower on Friday as the dollar posted broad losses a day after the European Central Bank put in tapering on the table on Thursday. Japan's Nikkei 225 slipped 0.63% after touching its lowest level since May this year. Second quarter gross domestic product data released earlier in the morning showed the economy grew 2.5% on year, below the 4% growth estimated in preliminary reading. Across the Korean Strait, the Kospi edged down 0.11%. The Australian ASX 200 shared 0.3%. Hong Kong's Hang Seng Index advanced 0.48%. On the mainland, the Shanghai Composite erased earlier gains to close flat at 3,365.4 points, and the Shenzhen Composite gained 0.15%. And Saudi Arabia plans to trim crude oil allocations to its customers worldwide by 350,000 barrels per day. The new policy, which is in line with Saudi Arabia's commitment to the OPEC-led Supply Reduction Pact, is scheduled for takeoff in October. State oil giant Saudi Aramco will reduce supplies to the world's biggest oil-consuming region, Asia, by 1.8 million barrels. The deepest cuts will impact major oil companies where supplies were reduced by 225,000 barrels per day, while allocations to customers in Europe will be trimmed by 70,000. Indications also show that exports to the United States is expected to be lower than 600,000. After the break, Afrexim offers $300 million in private equities. We would also look at Nigeria's fixed income markets. Do stay with us.